Hello, everyone, and welcome to the Mainstream Mortgages podcast. My name is Colton Boudra. I'm here with my business partners, Derek Mandel and Peter Paley. How's it going, guys?
Great. How are you
Great.
doing?
Perfect. I'm doing good as well. So today's theme on the podcast is about income. Income is super important when it comes to mortgage applications, explaining the difference of salary, self-employment, hourly, all sorts of different ways people make income these days. And it matters to us, it matters to a lender, and it matters to the insurers. So we're just going to explain that and go into a little more detail about how we position it on our end, what you can look for, when applying for jobs, you're keeping your employment, and all that kind of stuff. So Derek, I'll kick the first question over to you. What's the difference between full-time and part-time? How does a lender look at it? And how do you position yourself as a client to purchase a home with either full-time or part-time income?
I guess most people know what the difference between full-time and part-time is, right? I think in Manitoba, legally full-time is 32 hours a week or more, and part-time is less than that. So there's also, I mean, casual employment or temporary employment, but when you're talking about full-time versus part-time, uh, and how an employer, or sorry, how a lender looks at that when they're looking at your mortgage application, they're going to see full-time as less risk for them, right? Whereas part-time is slightly more risk because they don't really know if you're going to have any kind of guaranteed hours. Now, sometimes you can have guaranteed hours in a part-time position, but that is quite common. But in full-time, the lender absolutely knows for sure you're going to have at least the 32 hours guaranteed per week. So they're going to look at a full-timer with, a little bit stronger application, right, as compared to a part-timer. And even when you're looking at casual employees don't have a guaranteed minimum. So that's even more difficult, or I guess more risk for the lenders. So how do they look at, for example, how do they mitigate the risk for a part-timer versus a casual employee or temporary versus, the full-time? That's where they're going to look at your last 2 years of income, and they're going to take an average of that. Just in general, there's exceptions to this, and little nitpicky underwriting policies that I can get into. But the general rule of thumb is that if you don't have guaranteed hours from your employer, then you need to use a 2-year average of your income.
Perfect. Thank you. So I'll ask you one other question about employed income. If I'm going through the mortgage process and I'm thinking about one, either switching jobs to a different company, or two, even just completely quitting, what are the impacts on my mortgage pre-approval? And even if I have an accepted offer to purchase, what are the impacts then?
Great question. So the impacts when say you're an hourly employee is you're not going to be able to use as much of that income for your online or for your mortgage application. So the lender might end up declining your mortgage at the end of the day. And this can happen at any point in the process, really. So and not just if you change jobs or quit your job in the middle of the process. Also, if you just lower your hours. If your hours on your pay stub don't match up to what your guaranteed hours are on your letter of employment, the lender's going to say, whoa, wait, hang on, something's going wrong here. How come they're not working their minimum hours? How come they're not on pace to make their minimum salary for the year? And if we don't have a good reason for that, if it's just because, the client just didn't want to work, and or maybe there's an even worse reason for it, that could definitely jeopardize the approval for someone's mortgage. Now, usually there is a good explanation for it, and usually it's not that big a deal. If somebody just took some unpaid time off for a specific reason, that could be valid and wouldn't necessarily jeopardize the approval. However, it could either lead to a decline, or it could lead to just maybe you have to put more down payment towards the purchase of the home, that kind of thing.
Perfect. Thank you. So let's talk about self-employment now. Self-employment income. So working for yourself, right? A lot of people want to do it. So a lot of people are doing it, but it's a completely different income type than just your standard employment income. So Peter, I'll kick this over to you. Um, what are you looking for with self-employment income? What kind of documents do you need? And what are you looking at on those documents?
Thanks, Colton. Well, self-employed income and verifying it is all about the documentation that you provide. And as a mortgage broker, we ask for a lot of documents. And the reason why we do that is there's a lot of things we have to verify for one thing. And two, we have access to over 30 lenders, so each of them have a different policy. And I think it's really important before I start in on the business for self-income or self-employed income, is just to also state to our clients, like from last weekend, we're talking about the difference of a pre-qualification versus a underwritten pre-approval. Like your financial institution may decline you because they don't participate in a program, or they don't have an internal policy, even though many lenders can approve your income. So that's why it's always important to come to mortgage broker. Needed to put that little plug in there first. So self-employed income comes in many different ways. You can be a sole proprietor, you can be a partnership. Those are two unincorporated type business types, or you can be incorporated, or be like we are. We're technically self-employed, but we work on commission structure like realtors, mortgage brokers, some salespeople, and other professions. Like they can also be considered business for self. So it's really important that anyone who is self-employed provide us 2 years full tax returns, the whole thing, all pages. We have to go through every single page. 2 years of your notices of assessment. You use those to confirm that you don't have any income tax owing. And then in some cases, we're going to be looking for business bank statements and even invoices for your customers, depending on what kind of business type you're in. And if you're on commissions, we're going to definitely need all those documents for 2 years. And we're probably going to want to see how you're doing this year. Like, for example, we're filming this in November. It's almost at the end of the year. We want to see what your year to date commission income is to see if you're on track to meet what you did last year or the year before that. Even like we take an average and we want to make sure that you're on pace. And the other thing about self-employed income, when I started my little segment here, there's a lot of programs for self-employed people, but your bank or credit union or even the mortgage broker you're using may not participate in the program. And there's a program called BFS Alt A Income. I didn't name it, but what it is a stated income program for people who've been in business for themselves for more than 2 years and maybe write off a lot of expenses to keep their income lower, so they don't have to pay a lot of income tax. Well, we use this program if the people have 10% down, are willing to pay a little extra mortgage default insurance premium, and then we have the ability to state their income at a reasonable level. So, for example, we just use this for a hairstylist, and she was claiming about $30,000 of income on her income taxes, which didn't qualify her for a mortgage. But through this program, we were able to state or say other hairstylists can make up to $70,000. And we submitted that through the lender and the insurer, and they agreed that 70,000 was a reasonable income for a hairstylist. And we were able to get her a home. And this was a person who was declined by their bank because they didn't make enough income on paper. But there was that program. Maybe you were an electrician and then you started your own company, but you haven't worked the full 2 years to verify your income. Well, there's another program through CMHC called Business for Self Less than 2 years, and it's designed for people who worked in a trade or a profession and then left the company they worked for and started their own company. So what we can do is take your 2 year average from where you worked, make sure that since you started your company, you're on pace to make that same kind of income, and then use that income. Sometimes us poor self-employed people, like we really get picked on a lot And meanwhile, we keep the economy kind of going. But there's another program for people who have 20% down where we can actually take your bank statements and base income off your business banking deposits, backed up with some invoices and some reasonable expenses for a business. So there's a lot of different programs, a lot of different documents we require. And I can almost say if you're self-employed, a mortgage broker like Mainstream Mortgages is going to probably have a solution for you.
Perfect.
Sounds
Thank
like,
you. I appreciate. Oh, go ahead, Derek.
yeah, I was just gonna say, sounds like the self-employed side is a lot more complicated.
It's a little complicated, but it's worth the effort, you know?
Yeah, thank you for the live example there. That I think it's just super important to provide um, solutions for all these clients. Like you said, if there's a will, there's a way, and don't take no for an answer from your bank or whoever it might be. Like always get a second opinion, right? So I'm going to tip this over to you, Derek. I want to ask about contract work. What are we looking for on contract work? What is a lender? I'll use the example as a teacher, right? Because many teachers start out on contract for the first couple of years. So how are you looking at that, or an insurer or a lender, and what can a client do?
The first thing I think about when I see that somebody's on contract work of some sort is what is their job? What are they actually doing for work, right? Because the lender is usually going to say, okay, if this client is on some sort of contract, first of all, is it with a type of job that is usually renewed on their contracts? Is it, for example, like with the CRA? CRA does this a lot. They hire people on contracts, and the usually they just renew the term for all of their contract employees. I mean, obviously that's not always going to be the case, but lenders will look at that and they'll say, oh, this is a CRA employee with a contract. Well, then chances are they're going to be renewed and we should be able to use their contract salary in that case. Now, if it's, and this is the case for teachers as well, like you said, Colton. However, there are some cases where if you're on contract, the lender might say, I can't use your contracted salary because it's a different type of job, and maybe it's with a smaller company that has you hired on contract. Maybe it's in construction for some reason, that kind of thing. In that case, the lender goes back to the 2-year average rule, like I mentioned earlier. If you don't have, generally speaking, in all of these income cases, if you don't have any kind of verifiable guaranteed type of income, uh, any kind of guaranteed number that the lender can use, then they're going to fall back on that 2-year average. So we're going to look at your T4s from the last 2 years, or in the case of self-employed, they're going to look at the T1s and the notice of assessment, basically your tax returns for the last 2 years. But yeah, I hope I covered everything
You did.
regarding contract work. Okay, good.
Yeah, perfect. Thank you. So there's all these different types of ways and incomes to use when qualifying for a mortgage. Peter, is there anything we haven't touched on that maybe people aren't aware for income types we can use on a mortgage application, like if you have kids or any sort of payments we can use?
Yeah, for sure. There's quite a few things that we haven't touched on yet. There's pension income, there's disability income, there's Canada Child Benefit, there's support payments, whether they're child support or spousal support payments. And there's even a few other things that I might want to touch on are people who don't get proper pay stubs, and maybe the employer just writes them a check every 2 weeks, and how we can account for that income. And um, and I also wanted to talk about investment and interest income and how we can maybe use that because it's not something that's really good. So where do you want to start, Colton? Let's start with CCB, Canada
Yeah,
Child Benefit
yeah,
Income.
yeah.
All right.
Probably the most common.
So some lenders will not accept Canada Child Benefit, and the ones that do also have different criteria for when accepting it. So some lenders need kids to be 15 or under. Some need 13 or under, some need 12 or under, and some are even 10 or under. So if you have three kids and they're 8, 11, and 14, I mean, depending on your lender, Canada Child Benefit can get cut down by one third, two thirds, or entirely altogether. So it's really important that you understand there are differences between lender policies because the insurer will accept Canada Child Benefit up to the age of 15. Or with an alternative lender, they will accept the Canada Child Benefit up to kids who are 17 if you're taking a 1 year term on your mortgage. So Canada Child Benefit and the disability benefit are huge um, income contributors to a mortgage application in this day of higher interest rates and tighter qualifications. So it's really important people understand that. Derek, did you want to maybe talk about support payments, child support, and spousal support?
It's interesting you bring that up because I was actually going to ask you a little question about the CCB. Um, what if I'm, say, a separated single guy and my ex is getting the CCB? Is there any use that somehow for my
No,
qualification? Because
there isn't unless it's written into your separation agreement that you're getting a portion of it. There's no way for you to be able to use it.
Okay. So speaking of being separated, Peter mentioned that you could potentially be getting spousal support or child support payments through a separation. Or maybe you're on the other side and you're paying the spousal support and the child support. Either way has to be calculated into your mortgage application for better or worse, unfortunately. So if you are receiving any kind of support through separation, definitely let your mortgage broker know. And you're always going to need to provide that separation agreement. That's another thing that sometimes we'll often get actually clients coming to us saying that they're in the middle of a separation and they're going to be getting some support payments, but they just don't have that separation agreement shored up yet. And I know that can be a difficult situation for a lot of people, but I just want to point out that you definitely need to have that separation agreement fully signed and notarized before we can even proceed with your application. Um, but yeah, and again, if you're on the other side and you're paying those support payments, we have to calculate in that into the application, and you'll likely qualify for less than you were hoping for.
I just also wanted to
Per-
jump in there. If you're paying support payments, generally most lenders will add that as a liability, as a monthly liability, which really hurts your mortgage application. However, depending on the amount of down payment you have and the lender you're using, some lenders will let you subtract that support payment from your income, which is a much more favorable calculation.
True.
Perfect. Thank you. So it sounds like we could keep discussing different incomes we can use on a mortgage application, but for now, I think we'll leave it at there. If you guys, both of you, I'll let you both answer. If you guys could provide, I don't know, a couple lines, couple sentences about tips or tricks when applying for a mortgage, and what the most important thing to consider as a client in terms of income would be, that would be great. So,
Yeah,
Derek, I'll start
I
with you.
can
Yeah.
jump in. Yeah. So if you are an employee, then the main tip or trick I would mention is understand your income. Are you salaried or are you hourly? If you're salaried, that means that you're basically getting a guaranteed amount of money per year. And you're supposed to work a certain amount of hours, but if you take a day off or you get a sick day or something like that, you still get paid the same amount. If you're hourly, that means if you take a day off, chances are that you're not going to get paid for that day or for those hours. So when you're hourly and you have a pre-approval from your mortgage broker, the main tip I would say is just make sure you keep up your hours at work. Make sure you don't dip on, below the 8 hours a day or whatever the minimum guaranteed hours you have at your specific workplace. Make sure you're keeping that up at least until you move into the house. That's my main tip.
Peter?
Yeah, I wanted to sort of tie back into episode 1 and 2 about getting pre-approved or pre-qualified. Um, Many lenders just will take what you say at face value for what you make your income. So you could tell them I make 70 while the letter of employment is lower and the pay stubs are even lower. And a lot of people don't really maybe know exactly how much money they make on an annualized basis. Or in the case of people who are working two jobs, just because you're working both jobs doesn't mean you can use both incomes because most lenders are looking for a 2-year history in any employment field. So, I mean, it's really important not to make any assumptions that the money that you're actually making can be used in your mortgage application because I think that's the biggest surprised that I come across with clients. They're like, well, I make this extra $20,000 a year. And I'm like, well, you haven't made it long enough, so I can't really include it. Sometimes we're lucky to get an exception to use half of it, or there's a few other tricks up our sleeves that we know are known exceptions with lenders and insurers. But I think the best bit of advice I could give to anyone watching is don't assume that all of your income can be used in your mortgage application because it may or may not be. And I know we're working on a few people who do gig work right now, and it like we really have to cobble that income together and mitigate it and present it to the lender in a way that will be acceptable for them.
Great. Yeah. It's different situations for different types of incomes, and it can be challenging at times. And it's important for our clients to know the correct information and understand what we're looking at, what we need, and what their income actually is, right? So I think you guys hit a lot of important parts in this segment, and I'm sure we could talk about it for even more time because we didn't even touch on certain types of topics. But I think today we'll wrap that up as is. So for anybody listening, if you want a second opinion or us to do your mortgage, we'd love to. We'd be happy to take a look. You can reach us at 431-482-2187. You can call or text or email us at greatrates@mainstreammortgages.com, as we'd love to be your mortgage brokers. Thanks, guys.
Thanks, Colton.